Hello everyone, this is Fidel from Argentina. We're going to try to solve exercise number 7 from this week from chapter number 5 in the accounting course. And this I wanted you to see. We're going to try to do it live as a homework exercise. I'm going to solve it with you, but I wanted you to see the general form of the exercise before we do it. And this is what we're given. We're given the financial information of two companies, Martin Company and Knopp Company, or Knopp Company. And we're given some numbers and some are missing. So we have to find what the missing numbers are and show the computations, which we're going to do. And then we have to calculate in a second stage, we have to calculate the profit margin and the gross profit rate for each company, then discuss what we found. So this is the general form of the exercise. And now we're going to try and do it live on Wiley Plus. So the first thing we have to take into account here is that we're not given the figure of net sales straight away. We have to first fill these blanks. Okay, so first we're going to try to fill these first blanks. And how do we do it? Okay, we know that net sales, we're going to show our little help here. This is how net sales is formed. We have the normal sales revenue account, which increases by credit. And we have two contra revenue accounts, which are called sales returns and allowances and sales discounts. These are contra revenue accounts, so they increase on debit. And the result, net sales, is the result of sales revenue minus what's in here and minus what's in here. So that is how net sales is calculated. So we have here the sales revenue. We have to discount from that the returns and allowances. Okay, so we're going to do it. If this was simple math, and this was, instead of this number, this was like a simple number like 10. Okay, 10 minus what is 6. Okay, we do it the other way and we say 10 minus 6 is 4. So that's how we feel that. And so we take our calculator, which has disappeared. I'm sorry. I don't know what happened to it. It was open. Okay, so we're going to try to find this number. And the way we do it is 94,600, just this number, minus the net sales, which is 81,400, equals 13,200. Okay, that's the way we do it. If you want to check it out, you can check it out, so that you see that you got it right. We check it out. 94,600 minus 13,200 equals 81,400. Okay, so I hope that's clear. We're not going to check each one of them because it will get boring. Okay, so now we have it the other way. We know that X number minus 4,000 equals 132,000. So what we do is 132,000 plus 4,000 equals 136,000. So that's how we fill the first two blanks. Okay, we know that that is correct just by looking at it. And now we're going to calculate our costs of goods sold. And how do we do that? We need a little help here. This is very important to take into account. This is the general formula for everything we're doing here. We know that net sales, which we have just calculated, net sales minus cost of goods sold equals gross profit. we're going to not consider this right now. We're going to focus on this part of the equation. Net sales minus cost of goods sold equals gross profit. So here we have net sales, here we have cost of goods sold, and this is gross profit. We're going to find out the missing numbers. So we know that 81,400 minus 54,200, yeah, that's correct, equals 27,200. I'm from Argentina, so it's kind of difficult to pronunciate all these numbers. I hope you understand. I'm doing my best. Okay, and how do we calculate this? We know that's 132,000 minus 40,000 equals 92,000. Okay, 92, that's correct. So what do we have to calculate now? We have gross profit. We need to know the operating expenses. So we go back to our formula, and we know that gross profit, which we now have, okay, we now have the numbers for gross profit, minus operating expenses equals net income. Okay, so that's the way we're going to calculate this. We're going to take gross profit, and we know that if we take operating expenses from it, we get the net income. So we do it here. I'm sorry if this is kind of boring for you. This is the first time I do this. Gross profit 27,200 minus operating expenses 14,540. Yeah. Net income would be 12,660. We have a net income there. And for this one, we have the gross profit and we have the net income, but we don't have the operating expenses. We do it the same way we've been doing it. 40,000 minus 14,600 equals 25,400. Okay, so this is the moment of truth. We're going to see if the first part of the exercise is correct. Let's see. Let's hope and pray. Yes, we did it right. Okay? Okay, we're going to go to the second part of the exercise. And here we have to calculate the profit margin and the gross profit rate for each company. We have to round answers to 1 decimal place. Okay, perfect. How do we calculate profit margin? Okay, we're going to go back to our formulas. This one, we're done with it. This one, we're done with it. This is important, but for another thing, just a mention that in this exercise, we're using all these numbers up here, but we're not having these numbers, other revenues, other expenses, income before income taxes. We're not using that. This is like a simplified exercise. Just wanted to tell you that. Fine. So gross profit rate. What does this number means? It means that how much of every dollar is, it shows the relationship between our costs of goods sold and the revenue and the price in which we are selling, but without taking into account our operating expenses, which are very important, but we'll get to that in the second number we are calculating. Okay, so gross profit rate is calculated by gross profit over net sales. That's what we're going to do now. Gross profit over net sales. We go up here and calculate it for the first company. Gross profit of the first company, let's erase this, is 27,200. Okay, over or divided by, where was it? I'm sorry, net sales. Net sales is 81,400. 81,400. That's the gross profit. As you can see, it's quite a large number. This would be would have to be expressed as a percentage. So we have to say 33.41, and I believe we have to round it. Round answers to 1 decimal place. Okay, so in this case, it will be 33.4. And this is the gross profit rate, right? 33.4. 33.4. Okay, we're going to calculate it for the other company. And we have the gross profit is 40,000 over or divided by the net sales, which is 132,000. And that's their gross profit rate, which is 30.3. Okay, 30.3. Now we're going to calculate the profit margin, which is a number that is equally important because this one takes into account the operating expenses. In other words, it doesn't just tell you how good is your selling price compared to your cost, but it also tells you how much money you're spending in selling your products. So operating expenses are very important, and with this number, this ratio takes it into account. So the profit margin ratio is calculated by dividing net income divided by net sales. This one's pretty easy. Net income over net sales. So okay, I'm sorry, I think I pushed the wrong button there. So we're going to continue. What we're looking for is the profit margin ratio, and we get it by dividing net income divided by net sales. Okay, so we're going to do it. Net income divided by net sales. We're going to do it for Crane Company. Net income is, I want to erase that. Net income is 12,660 divided by net sales, 81,400. Okay, that's our result, but we have to express it as a percentage. In this case, it will be 15.6 because that's the way we round it. 15.6. Let's hope it's okay. We'll see. So, for the other company, net income divided by net sales. Net income is 14,600 divided by net sales, which is 132,000. So it will be 11.1 because we have to round 0.6 to the nearest decimal. 11.1. Okay, let's see how it goes. 11.1. The moment of truth. Yes, it's correct. We did it right. So now, what do these numbers tell us? The gross profit rate is very similar between the two companies. We're not told what these companies do, so we don't know if that is a good rate for the industry or not. this looks like the food industry, but I don't know what they crane company. I don't